What's going on, guys? Marcus, MTZ Marcus, Ticker Talks. I just want to hop on real quick. I know the market is actually, it went down yesterday, and it looks like it's going to pump today, or at least, retrace a little bit back to the upside. I would just advise with caution. Again, this is not financial advice. I just want to make sure that you guys kind of understand what I'm looking at or kind of see what I'm looking at. I am not a professional. I always say this, and I'm going to say this in every single video. I'm a new trader trying to help new traders understand the market as I understand it. So, if I was a financial advisor, I'd be on Wall Street. I'm not. I'm just trying to make a little bit of change with some extra money that I have. And this is just really important for all of us to understand that the market is, although it looks bullish, and it is bullish overall on the grand scheme of things, it does want, and I believe needs, a healthy pullback to go higher. So I don't know what that pullback looks like. There are times where we've seen certain charts and certain time frames in the past that the market has gone down 5, 10, 15, 20% for a healthy push higher. I don't know if that's going to happen, right? But I do know that when I look at this chart, SPY is what I look at mostly. When we look at the 195 or the 4-hour chart, right? And I draw my Fibonacci retracement from the previous push, the start of the previous push to now, it looks like it wants to get back into the 742 range, right? When it gets there, I don't know, all right? So that's what we got to honestly really be careful about. If you're taking into consideration the lower time frames, right? And I draw my Fibonacci's the other direction, right? So the Fibonacci that I have drawn here is for it to bounce off this and then go higher, right? If I look at, every market needs healthy pullbacks from both sides, upsides and downside, right? So let me remove this fib. If I draw the fib from the top of where the market topped out a couple days ago to the low of today, which is where we kind of pushed up from. I believe in between 755 and 756, it will go up to there and then come back down lower, right? So we just got to be very careful, like not buying shorter dated contracts. If you're looking at investing for long term, 5, 7, 8, 10 years, this really doesn't matter much. You just buy the dip on whatever stocks that you're looking at. But I just wanted to jump on and say, like, we got to be careful. This does look like it wants to push back into all time highs again. It looks, it's always been by the dip. Even in this previous situation, you got to understand that it pulled back pretty good. It didn't have just one red day; it had a few red days, and it started to push up. So, just because we have one green morning, now it's approaching 12 o'clock, doesn't mean that it's going to continue higher, right? We just got to be careful. The play would have been maybe to take the bounce off the lows, which if you look at like the 30-minute, let's go to actually the 65-minute chart, you probably should have taken it in this range here, the highs of 752 and that break there to get back to OTE, the OTE stands for optimal trade entry, back to the downside. So the optimal trade entry, as I mentioned before, 755, 756 range, maybe closer to 757. And it could still go there, and it probably will go to that range. But I don't trust it long side up here. Now, if it does something like this, where it goes up to the 756 range, 757, comes back down and makes a lower high, a higher low, excuse me, and then you might want to take it back to the all-time highs. But I would barely be cautious in these levels. Yesterday, I'm sure a lot of people that were trading options took a hit. I took a hit. I'm just going to be very transparent. I had a few shorter dated contracts that I probably shouldn't have had, and we just learn from it. I think this is the most important part of trading in this market. You just got to learn from your mistakes and not make them repeatable. So listen, that's all I got right now. I just wanted to kind of jump on and tell you that. Some of the tickers that I'm looking at are doing pretty decent today. But again, we were very cautious. We're taking profits as we can, and then kind of looking for the next move, whether it be up or down. So listen, have a wonderful rest of your Thursday. I hope you have a great week, and then to the weekend. I'll try to get back on. More than likely, it's going to be Sunday to do a watch list going into the week, depending on how the market finishes. But I just wanted to hop on and give you a little bit of insight of what I'm looking at and what we can do going forward. Be cautious, right? Like we're in a range where it could come back down more. I mean, let's just be real. It could also fly, with this market and economy. We have some news tomorrow. I think it's non-farming payroll. That comes out in the morning. That could be a catalyst to take it higher or drop it. But I'm more leaning towards it coming up to this range and then dropping lower for a more healthy pullback. All right. Listen, again, have a wonderful day. I hope this helps. Again, if it doesn't, just let me know. If it does, let me know in the comments. Like, follow, subscribe, share, please. Again, this channel is strictly for newer traders trying to look at the market from a different perspective using technical analysis from a new trader perspective, right? I do get my information from multiple sources, and I go based on what the charts say. So I just wanted to kind of highlight what I'm seeing from that standpoint. But have a wonderful day again. Take care. Bye-bye.